All right, folks, here we are on Trading Up. We've got Rolf in the house. Now, if you recognise him, you've probably been listening for a while because he was on way back in episode 6. We worked out of Trading Up back in 2018, so it's 4 years on. Welcome back to the show, Rolf.
It's good to be back, yeah.
Now, look, you're now based in Thailand, and we're not going to get your full story. So if you guys want to hear that full story, head over to the podcast. We'll put a link underneath this video so you can get access to it and hear his full story. But this is very much around journaling, and you guys have created a journaling product that is super, super cool. I've actually been using it myself for the past probably month and a bit, trying out a new strategy on it. And I've got to say, it was so easy to use, so simple, intuitive to understand that you guys are going to get to have a look at that in a second. But to start off with, we're going to sort of get to the nuts and bolts around journaling. And I'm sure you've sort of spoken about it over the years. But I mean, do you want to give the guys some insight into probably number one, why is it so hard for people to actually do the journaling? Folks, if you missed out on joining the Trading Nut Funded Cup, don't worry. With over 3,000 traders registered, my sponsors City Traders Imperium have decided to run another, but this time they've promised the prizes will be even bigger and better. Folks, if you want to register for this and show your skills as a trader, click on the link above or the link below the video or in the podcast description, then sign up for free before 15th of June 2022 and get 10% off any City Traders Imperium product just for entering the competition. Good luck, folks, and we'll see you in the cup.
So maybe we can spend like 10 minutes about what I've learned, because hundreds and thousands of traders have gone through Edgewonk. In Edgewonk 2, I have done reviews about traders who sent me their journals, and I've learned so much about how people use it. And I've also seen and learned a lot about what are people having. So there was really some really big aha moments for me as well. So I guess you can see my screen now.
Yep.
And I've just provided, like, we can do like 5, 6 of those and then jump into the journal. But so when you ask yourself, how do you get better as a trader? You learn from your mistakes. And as I said, it's always a good primer. You ask yourself, how much do you actually remember from your last trades? What did you do well? Did you break your rules? What was your entry like, your exit? How did you manage the trade? Did you leave money on the table? And yeah, if you're not a Rain Man type of person, you're probably not going to remember a lot. And that's already giving you a sign that there is definitely a need to at least somehow record your trades. It also helps, what we have found, to become more aware of your emotional side of trading. Obviously, emotions play a big part, and many traders believe that they have to shut down their emotions, which I have seen is not a good way, or not a good advice. But the best way to use emotions is actually to find out, okay, when are emotions coming up? What are they telling you? How and in what situations? And that's also really, really interesting how a journal can help you find that if you use the journal in the right way. You can work on reducing losing trades or reducing losing trade size. So you learn about your losses. Either you avoid them or you learn about things so that you can turn them around. You can maximize winning trades, which is, I think, one of the biggest problems that traders have after not being able to stick to their trade rules and get into wrong or trades outside of the strategy, is that if you're in a good trade, then you have so much fear and anxiety and uncertainty that you're going to close the winning trade too early and leave a lot of money on the table. And that's why we built just one feature just around understanding how much money are you actually leaving on the table, or if you're doing it well, Edgewonk will also tell you that by managing your trade. So the feedback loop is very, very important. In trading, obviously, or when we look at other things, look at if you are running your own business and you're selling a product or multiple products, let's say, but you don't care about how much you're selling, what they're costing you when you buy them, how much money you're spending on rent, on your employees. You don't care about how much taxes you spend. And obviously you're not going to probably estimate that this business has a very long survival rate. So obviously you need to, and that's why I'm coming from I study business and finance, and I worked in corporate finance in the accounting area and in financing. And the need to really know your data as a business was really obvious there. Obviously, you have to know into the very, very small details everything about your business. And I took that to my trading as well. And you really have to know. People always say treat your trading like a business. And this is really where it starts, that you know your numbers and that you are always on top of your numbers. So a feedback loop is you record your trades, you have your data, you analyze, okay, what did I do? What did I do well? What didn't work out? Then you learn from your data, you adjust your trading based on the hard facts, the real data, instead of just believing, I could have maybe used a different moving average or a different candlestick and then I maybe would have made more money. That's how many traders approach it. But if it's not based on actual real hard data, it's not going to work super well. And one of the big realizations that I had is traders start out being consistently losing a lot often in the beginning, and they believe they just have to find this one little tweak and then they're going to be suddenly winning traders. But in reality, what I've seen is that it follows this gradual process, and you have big winners, you start out with big losses, you are losing a lot of money, and you have to go to a period where you lose less, you start becoming a break-even trader, then you go to small profits, not consistently, but at least you see sometimes more profits coming, and then that's how you build it. And what I've seen is at every single stage of the process, when you go from one stage to the next, there's a specific thing that is traders holding you back. So at the beginning, when we are at the core, you are starting and you have probably big losses, people blow up their accounts, and that is something that you have to work on first. It doesn't matter if you have a bad risk management, if you have those big losses, if you completely lose it every few weeks, then you need to work on your risk management, on your mental game, and other things, the little nuances that we can look at later in your trading when you are slightly profitable or when you are a break-even trader and you have this core foundation. Those things come later, but they're not going to have an impact now. So you really need to focus on finding the outliers in your journal, and that's something that's really important. We have a lot of metrics, as we can see later, for finding outliers, and it's important to become aware of the outliers. And as you asked in the beginning, what is one of the most important benefits of having a journal is this sense that you are getting aware a little bit more of what is actually happening in your trading. Often there's money is involved in trading. We are risking our money. The market is going up. We have big fluctuations. So we are often very tense and we don't really fully are aware of everything that's going on. So a journal, you come back to your journal at the end of the day, at the end of the week, you have a more relaxed approach. You can really live through your trades again, and you're going to experience your trades very, very differently. So first step, we are looking for outliers. Then the next step is we're working on our mindset and our discipline. And I think that's where one of the big Edgewonk benefits is that you are actually able to track and analyze and visualize your level of discipline. How well are you able to execute your trades? Are you breaking your rules? How often are you breaking your rules? How much money are you losing when you're breaking your rules? And this is also 100% customizable. So whatever your struggle is in your trading, you are able to 100% customize Edgewonk to track your specific behavior and then really find out, okay, how much are you actually losing? And that's, as I said, a really big eye-opener for many traders when they see, okay, I stopped doing maybe those 2-3 little things, and they would make the difference between consistently losing and maybe break-even trading. That can be a really big motivation for traders. Then, as I said, the big next step is you're able to respect your rules a little bit more. You're not breaking the rules all the time, and you have a little bit more of consistency. But where are you losing the money? Because you don't have much experience with winning trades, as soon as the market is a little bit in your favor and it goes around, you close it out, you move your stop loss too close to break even, you're stopped out, you suffocate your trade. And that's why we have our trade management analysis in Edgewonk. So we analyze exactly what is your potential performance if you would have listened to your trading plan and your actual trading performance, how much you realize. And very often in the beginning at this step is you see a big difference between how much money you could have made and how much money you actually made. And that again can be a big confidence boost when you see, okay, I could have made money because my analysis was good. I was in that trade already, but I just exited too early, too late. I took the stop loss, the loss too late. And that can be really, really a big thing actually when you see, okay, I could have been already break even, maybe slightly profitable, and then you are more likely to also change your behavior. When you see the data in front of you and it's your own data in your own journal that, okay, that shows you that my trading behavior cost me that much, and if I would not have done that, I would have been a profitable trader. That's going to be a huge, huge shift for your mindset. And then as we get to the small, consistently profitable, it's about refining the things, it's doing more of them, it's reducing the it's improving the efficiency, reducing the amount of errors that you do until it gets better and better. But those are usually the big three things. And we can just jump right into Edgewonk, and I'll show you how this would look like in action. So Edgewonk is completely browser-based. So you need an internet connection and a browser, and you can use it on your phone, tablet, on the computer. It's not 100% responsive, but yeah, journaling on your phone is probably not the most enjoyable thing you can do anyway. So I would recommend a computer or at least a tablet, and you get the full experience. And you can choose light mode and dark mode, obviously. And for the most part, we do support a few trading platforms, actually. So if you're using, for example, MetaTrader, 4/5, C-Trader, NinjaTrader, IG Forex, Dukas Copy, and a few others, then you can actually download the trading statement from your broker, import it into Edgewonk, and save a lot of time. If your platform is not listed, we made it very simple to add new trades manually, so you can do that as well. But we are always adding more platforms as well as we go. So what we have here is the heart of Edgewonk. That's where you have all your trades. And we have a few things that in the beginning, this is what I would draw your attention to. This is called the tilt meter. And it shows you and visualizes you green and red. It's very obvious. Green means you did well on the trade. You respected your rules. And if you see a red tilt meter, it means you did something wrong there. You broke your rules and you didn't execute the trade as it would have been according to your trading strategy and your rules. So in the beginning, when you do the Edgewonk course, for example, the free one, in the beginning, I made something like a tilt meter challenge. So I would focus your attention and bring your attention to this tilt meter, and your daily challenge when you're trading, keep the tilt meter in the back of your mind and always ask yourself, if I execute this trading decision now, how would it affect my tilt meter? Would the tilt meter go up? Would it go down? Would it be red? Would it be green? And if you can just keep that in the back of your mind, then already the journal is more than just a data graveyard, which is what most Excel spreadsheets, when they are self-made, turn out to be.
And how do you I suppose work out the tilt meter? I mean, how does Edgewonk work out what is,
yes,
what's someone who's broken the rules? How do you know if you've broken the rules and stuff? How does it know?
So for every trade, when you enter the trade, you have your trade comments. So you can rate your entry, you can rate your exit, and you can rate your trade management. And this is completely customizable. So for your entry, you could say things like the entry was too late, it was too early, you were chasing the price, maybe you felt impulsive, it was a good entry. And you can rate it then. Is the comment that you're ascribing and adding to this trade, is it showing you a positive or a negative performance or action? And then you can rate your trade with those three entry, exit, and management, those categories. And then we just sum it up and see, okay, is it more positive? Is it more negative? And that is then how the tilt meter is built.
I think when I was using it, I didn't actually go onto the advanced tab. So, and I'm one of these people that didn't watch the course as well on how you use it.
I would really recommend to watch the course. If you're in your Edgewonk, you just go to account and then here journaling course, and that will take you to the course. It's completely free, accessible with videos and text. And yeah, right at the beginning, the tilt meter challenge is waiting for you, because it's one of the core things that will help you.
Yeah,
it will help you. I think it's in the beginning. If you cannot keep your tilt meter green, I think Richard Dennett said it. He could post his trading rules in a newspaper and nobody can follow it. And yeah, if you cannot follow the rules of your trading system, that nothing else really matters what you're gonna tweak and do in your trading. So that's, I think, the first very big thing. And then obviously you can do nice things with it when we go to the trade comments. So here's a lot of analysis tools. We can get into this later, but under Chart Lab you'll find a lot of visualizations, trade management, trade comments. That's where you then jump around between your entry comments, your exit comments, and your trade management, and you can visualize them. Okay, if I managed my trade well and it was according to the rules, I made that much amount of money. But if the trades have assigned the comment of mistake, or I didn't manage it at all and just let it run, then that's how much money I made or lost. So you can very nicely visualize it, and you can see, okay, how much money am I making when I am respecting the rules, or I am taking an exit and it's not according to the rules. And you can very nicely compare it right away and see, okay, my performance could have been much, much better. And I think that's what a lot of traders struggle with when they never really confront their data. They always maybe have this sense of what could be going on, but if you don't really see it in front of you black and white or red on white, it's too abstract, and you're not going to draw any lessons out of it, or it's not going to change your trading behavior. What is also a good challenge in the beginning when you go to the chart lab, efficiency. And efficiency is also based on the tilt meter and how well you respect your rules. And a tilt meter shows you efficiency. The efficiency shows you the efficiency in percentage, and it shows you how well do you respect your rules. On, for example, 60% of the trading decisions that you made, they were according to the rules. Whereas when you see it go down, here only 53% of the trading decisions that you made were according to the rules. So it can be a nice challenge to have your efficiency above a certain level. I would not recommend that you hold yourself to standards that are too unrealistic. So I wouldn't say, okay, I want my efficiency to be 100% and I don't want myself to never break my rules. That's not realistic, and I think it's going to set you up for a lot of frustration as well, because it's very unrealistic to meet those goals. But having a goal of, okay, I want to see my efficiency higher than maybe last month, and I want my efficiency to be above whatever it is, 50%, at least on half of my trading decisions. I want to be inside of the rules, and then that's something good to shoot at. And it's going to probably impact your performance a lot once you're able to avoid those unforced errors that are often coming in. So we have a lot of things. As I said, outliers is something to look for, and we build something that is really, really interactive. We call it the trade analytics. And here you can really drill down into every little aspect of your trading. We can start with, for example, the trade setups. So here we have all the things that you can analyze: weekday time frame, confluence factors, patterns, preparation, the mental side, indicators. You can set it up whatever you want to track, but we can also say, okay, we want to analyze the different trade setups. So every trade in Edgewonk, you can say what type of setups was it based on. If you trade different setups, if they have different rules, for example, you can tag your trades, and then you can later analyze them and see, okay, what setup is actually working well, what isn't working well. And then you get things out like how many trades did you take with a specific setup? What is the win rate of the specific setup? What is the expectancy? And here, what I would recommend is look for outliers. Expectancy shows you the per trade value. How much on average did you make or lose on a specific trade? And if you see huge outliers, that shows you that, okay, something is really wrong there. At least if the outliers are negative, that should be something to really focus on. If you see, for example, we could say, okay, let's analyze the time frame. Is the trader good on every time frame? Is he more of a day trader? Is he more of a swing trader? Then we could say, okay, what are the different time frames saying? And we can see, okay, the 4-hour and the daily are underperforming. He's losing quite a lot of money here compared to the other time frames where he is making money 4-hour, 1 hour, 30 minute, 15 minute. So it seems like this trader may be struggling on the higher time frames, and maybe his strength is on the lower time frames. So that is something that you can get out of with the customization. And you can set this up in whatever way you want to track, whatever you want to track. We have had traders that are tracking their preparation or their mental well-being. Did you sleep well? Do you have stress in your daily life? Did you go out last night drinking with your friends? Are you on a good workout regime? And those are often things that are quite interesting to see how they are actually reflecting it. You can do the level of preparation. Did you prepare? Did you come unprepared? How do you feel in general about your trading? Those can be all very interesting things. And then we have all the data here. The expectancy is always very interesting because it shows you directly, okay, how much money am I losing or making? So when you see, okay, on the trades that are taken on the daily time frame, the trader is losing on average around $200 per trade, but compare that to his trades on the 15-minute, he's making 231 per trade, or on the 30-minute, 280. So there's a huge difference, and you can right away see what's going on here. So that's something and you can then very drill down into your trading day. What is the different weekdays, how they are performing. If you're more of a visual learner, you can just say, okay, I want to visualize the performance per day. And then you can see this is the last 50 days. And this is a sample Edgewonk, so there's not a lot of data in it. But we have things like, okay, how are Mondays performing? Were the Thursdays, maybe Fridays, or end of the week, I'm not on top of my game anymore. I'm trading crypto Saturday, Sunday. They are performing quite well. And then you can drill down. And obviously, you can then go very, very detailed into it. We have the filters here. You want to analyze the pullbacks only. I only want to analyze my pullback trades, how they are performing. They're not doing well on Thursdays. They're doing well on the beginning of the month. My Saturday crypto day is going very well. So there's just so much that you can find out. The R distribution is very interesting. This is very unique to different trading styles. So if you have a fixed reward to risk ratio system, so maybe you're shooting always for 2-to-1, 3-to-1, you should see that a lot of trades are probably in the area in the beginning. They're clustering around 0 to maybe 2 or 3 R. But if you're a trader who is having an open-ended target approach, you're a trend follower, and you hope to hit those big trades every now and then, you will see a very different distribution, and then you can see, okay, how is my trading actually performing? What are the best setups? How are pullbacks performing? You can see there are a few big outliers that are making me a lot of money. The bulk is here. I have a few problematic trades where the losses exceed 1 R, which is not a good sign. It means that you executed your stop loss too late. So those are very, very helpful things. As I said, the trade management, I think, is one of the most important things after you are a little bit more, or if you are capable of respecting your rules a little bit. So here we analyze for every trade, how did you execute the exit, and how would the trade have performed if you did not interfere with the trade? So what we're basically doing is we are comparing your actual trade management versus a set and forget approach. So if we see that, okay, you bought a share at 100 and you closed the trade at 120, but your profit was at 150, and the profit target at 150 would have been reached, you could have made 30 more per share on that trade. And then we're going to visualize that, okay, on that trade, you could have made more, and essentially you cheated yourself out of a big profit. And a lot of traders in the beginning, they will see that there's a big gap between how much money they are making and how much money they could be making. And this should be a very big aha moment. And it should not be something where you talk down yourself or on yourself, or you feel bad, because that's something that it shows you that, okay, there's a huge profitable core at your strategy, and you just have to trust your analysis. You have to trust the system that you're trading. And in the beginning, I think it's quite normal to obviously not be 100% confident, because you have not had this long experience. You don't fully know what to expect from the system. But if you see that, okay, I just need to trust the system, it would have made more money than what I did right now, and I have to stop interfering with it, that can be a very big shift for the trader as well. When we talk about those things, I think it's interesting to also look at the simulator. So what we do is we take your current trading performance. So we look at all your trades. We take out the metrics, the win rate, how much money you're making or losing per trade. And what you can then do is simulate it. Okay, what will happen if I keep trading that same way on the next, let's say only 100 trades, and we run maybe 20 simulations. And then you can see, okay, what is this telling me? First of all, you can see for the most part, it's kind of going up. We are starting here, and for the most part, you have a positive expectancy, but you also see there's a very wide spread. So this means that there's a lot of volatility. And that could mean that your average winners and average losers maybe differ too much. So if we see, okay, what was actually our best setup, performance by setup, you can see, okay, the retest is performing very well. So if we only take retest trades, what would happen? And then we can see, okay, what's happening now? and you can see there's not a lot of volatility because the average winner is much, much bigger than the average gain, or at least here in this case, actually, it's interesting. The average loss is higher than the average gain, but the win rate is so high that you're not going to have a lot of volatility in this trading. So this can also be a very good tool to understand what to expect from your trading going forward, so that if you hit a losing streak, which will come inevitably, you are more prepared and you're ready and say, okay, this is not unlikely. And you can see, okay, what is the longest winning streak? What is the longest losing streak? If we compare, for example, what is a system that doesn't have too much, and you can see, okay, this is going down. This seems to be very, very underperforming. And then you can really nicely understand your performance on a much different level. Also, when we look at losing streaks, I think that's also a very interesting way. How many losing streaks does the trader have here? So not too much. He has a few losing streaks of 2 trades, of 3 trades here, but that's okay. No big losing streaks. Winning streaks look good. He has losing streaks of 2 trades, 3, 4, 6, 7. And I think, I understand that there's a lot of data in here that may be intimidating. But as I said, in the beginning, you probably don't need to focus on everything. So we have to build Edgewonk, when we started Edgewonk, to build it in a way that whether you are an absolute beginner, we have something for you. But if you are an advanced trader, and we have a lot of professional traders who use Edgewonk as well, then we still have the options that will support you. So as you grow as a trader, you can dive into different things, and whatever you then want to work on in your trading, because there's probably always something that you can improve, we have the right tool and metric for you. So that's why there's a lot, and that's why I made this course, because I understand you open Edgewonk and there's just so much looking at you that it can be intimidating. So do the course. It will take you by the hand and really show you, okay, I'm entering my first trade, then my first trade is in Edgewonk, what I should be paying attention to. That could be also a very good way to go.
Cool. Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. And look, that is an absolute beast of a tool, and by the looks of it, I've only just skimmed the surface when I was using it. So I mean, actually, what I did find really useful was just going back and having a look every week and sort of seeing, okay, right, what have I done? What have I done well? What have I not done well? But now I can, with what you've just shown me here, and damn, I should have done the whole course, but I could have gone in much deeper and got a whole lot of insight, which would have been fantastic. So, right. Rolf, thank you for coming on and sharing all of this information around Edgewonk. And guys, I hope you have picked up a thing or two around journaling, what you should be looking for and that sort of stuff. There is a discount code. It's going to be underneath the video here. If you do want to get your hands on Edgewonk 3, which is completely online, it's so easy to use. And so what I really liked about it was just being able to use a screen. I've got a screen cropping tool, right, where I just hit a button, print screen, and it just takes a screenshot of the screen. I can annotate on it and stuff, and then I just hit copy, and then I paste it into the actual field in Edgewonk without doing anything else, no saving the image and then copying it across and all that sort of stuff. And it just saves the screenshot of the actual trade in there with whatever I've written on it, which is fantastic to go back and go. Because what I thought was like, oh, great, I've had a great trading week. I've, hit all my rules and stuff. Went back and looked at my trades, and I was like, hang on a sec. These aren't good trades. These are like, why didn't I do that? Why didn't I do this? Like, there were so many things I could have done better. But I thought off the bat that I'd had a really good week. So yeah, look, there's a link and a coupon code underneath this video, guys. It'll tell you how much you get off Edgewonk if you do want to join it. Rolf, look, thanks for coming on. Is there anything else you want to say to the guys before you disappear? No, I just hope it's not going to take another 4 years until we meet again. And if your users have any question about Edgewonk, we do have a very big FAQ. I will check the comments. If there are questions, I can jump in as well. So yeah, it was really nice catching up again. Brilliant. Well, look, guys, Thanks once again to Rolf for sharing all of what he shared with us today. Do remember, hit subscribe, hit like, click on that notifications bell, and click all to get videos like this in the future. And do go and check out his podcast, episode 6. It would be a massive, massive evolution from my point of view. I don't know what I would have been like at episode 6. That said, that was after my 52 Traders podcast series, so who knows, I might have been all right. All right, guys, thanks for watching.